This voice is taken from an article with the title, How to Report Cryptocurrency on Taxes, which has been published on TraderTalks.net. When it comes to taxes, cryptocurrency can be a bit of a tricky subject. Cryptocurrency is a digital asset that operates on a decentralized, distributed ledger system, and it is not backed by any government or central bank. The Internal Revenue Service, IRS, considers cryptocurrency to be property, and thus, it is subject to capital gains taxes. In order to report cryptocurrency on taxes, you will need to report all gains and losses that you made throughout the year. This includes income from trading, mining, and any other activity involving cryptocurrency. You will also need to report any spending you did with cryptocurrency, such as buying goods or services with it. The first step to reporting cryptocurrency on taxes is to calculate your cost basis. Your cost basis is the amount you originally paid for the cryptocurrency, plus any fees you paid to acquire it, such as transaction fees. You should also include any other costs associated with the purchase, such as transfer fees. Once you have calculated your cost basis, you can calculate your gains or losses. This is done by subtracting your cost basis from the current market value of the cryptocurrency. If the resulting number is negative, the amount is a loss. If the number is positive, the amount is a gain. When it comes to filing your taxes, you will need to report all gains and losses separately. To do this, you will need to fill out IRS Form 8949. On this form, you will need to include your date of purchase, the amount of cryptocurrency you purchased, the market value on the date of purchase, and the market value on the date of sale. You will also need to include your cost basis and the resulting gain or loss. Once you have completed Form 8949, you will need to include the total gain or loss from the form on your tax return. For tax purposes, capital gains and losses are broken down into short-term and long-term. Short-term capital gains are those that are held for a year or less, while long-term capital gains are those held for more than a year. The tax rate for short-term gains is equal to your regular income tax rate, while the tax rate for long-term gains is typically lower. When it comes to reporting cryptocurrency on taxes, it is important to keep detailed records of all your transactions. This includes the date, amount, and type of cryptocurrency purchased or sold. Keeping detailed records will help you accurately calculate your cost basis and gains or losses, and it will also make it easier to complete your tax return. Cryptocurrency can be a bit of a tricky subject when it comes to taxes, but it is important to report all gains and losses accurately. By calculating your cost basis and accurately reporting your gains and losses on IRS Form 8949, you will be able to accurately report cryptocurrency on your taxes.